We would like to begin the announcement of the first half results for the fiscal year 2018. Thank you for joining us out of your tight schedule today. We are happy to see so many of you in the room. I would like to ask Chief Financial Officer Mr. Karube to present the results of the first half of the fiscal year 18. Karube-san, the floor is yours. Yes, thank you for joining us for the announcement of Nissan's first half results for fiscal year 2018. I am Hiroshi Karube, Chief Financial Officer. Today, I will outline our second quarter financial results as well as our global sales performance and financial results for the 6 month ending September 30th, 2018. Following the presentation, my colleagues and I will be happy to take any questions you may have. For the 3 month period ending September 30, consolidated net revenues were 2.82 trillion yen, operating profit total 101.2 billion yen, and net income was 130.4 billion yen. Free cash flow for the automotive business was a negative 4.8 billion yen, and we ended the period with an automotive net cash position of 1.56 trillion yen. For the second quarter, we faced challenges such as the devaluation of emerging markets currencies and rising commodity prices that continued from the first quarter. As a result, revenue and operating profit decreased year on year. I will now explain our performance for the second quarter of fiscal year 2018. Although we are progressing toward improved quality sales, retail sales volume and market share were nearly flat year on year. Dealer inventory volume was optimized through the reduction of wholesale volume, which resulted in the decline in net revenue. Our global retail sales volume was 1.374 million units, a 0.7% decrease from the previous year. However, our wholesale volume decreased 3.7% to 1.313 million units, and net revenue decreased 2.6% to 2.8 trillion yen. As a result, our global dealer inventory decreased by about 50,000 units in the 3 month period from July to September, and by about 100,000 units in the 6 month period from April to September. We started the second half of the fiscal year with an optimal level of dealer inventory. Looking at the sales by market, we improved and increased sales in Japan, China, Thailand, the Philippines, and Latin America. In Japan, strong sales of Nissan Leaf, Note e-Power, and Serena e-Power are what we enjoyed, and we recovered smoothly from the issues in fiscal year 2017. Sales for the second quarter increased by 1.6% from the previous year to 155,000 units. In China, we realized steady growth with a 0.4 percentage point increase in market share to 6%. We took the first step towards sales recovery in the ASEAN region, with sales in Thailand and the Philippines increasing year on year by 22% and 68% respectively. In Latin America, as our sales increased 17% from the prior year, we took the first step towards growth. In the United States and Europe, we are addressing urgent tasks such as improving the quality of sales in the United States and dealing with the strict environmental regulations in Europe. Operating profit for the second quarter decreased by 27.3 billion yen from the previous year to 101.2 billion yen. Volume and mix, including the reduction of selling expense due to decrease in volume, had a negative impact of 14.4 billion yen, due primarily to the decrease in wholesale volume. However, this was offset by the 7.2 billion yen positive impact from selling expenses, which included the improvement of incentives spending in the United States. We minimized the negative impact to a net effect of 7.2 billion yen. The headwind from raw material price hikes and continued investments for the future, such as R&D, had a negative impact on operating profit. However, initiatives such as our cost reduction efforts are progressing well, resulting in a 9.9 billion yen positive impact from Monozukuri and others. Due to the significant impact from the devaluation of emerging market currencies such as the Turkish lira and Argentina peso, foreign exchange had a negative impact of 30 billion yen. While we managed to offset the negative impact from sales performance with the positive impact of Monozukuri and others, it was not enough to cover the negative impact from foreign exchange. This resulted in the year-on-year decrease in operating profit. Turning to our sales performance for the 6 month ending September 30th, global total industry volume, or TIV, rose 2.3% to 46.59 million units. Nissan sales volume grew in China, Latin America, Africa, and other markets, and it decreased in North America and Europe. Our total unit sales decreased 1.8% to 2.68 million units. As a result, our market share fell 0.2 percentage point to 5.8%. Moving to our sales performance in the key regions. In Japan, TIV remained stable at 2.48 million units. Nissan sales increased 0.5% to 285,000 units, resulting in a market share improvement of 0.1 percentage point to 11.5%. Strong demand for the Serena e-Power, which was introduced this past March, and the new Nissan Leaf, which went on sale last year, lifted sales. Sales of the Note continued to be strong as the Note became the #1 selling registered vehicle in Japan for the first half of fiscal year 2018. In China, where our sales performance is measured on the calendar year basis, TIV from January through June was up 5.1% to 13.23 million units. Nissan sales increased 10.7% to 720,000 units, representing a market share of 5.4%, an increase of 0.2 percentage point from the comparable period in the prior year. The growth was driven by current models including the Sylphy and X-Trail, as well as new models such as the Venucia D60 and Kicks, which were introduced in late 2017. As China is reported with a 3-month lag, we also have the sales figure for the third quarter. For the July to September period, TIV dropped by 5.4% to 6.13 million units, while our sales increased 1.6% to 375,000 units, resulting in a market share of 6.1%, up 0.4 percentage point. For the January to September period, our sales grew by 7.4% to 1,096,000 units, and our market share increased 0.4 percentage point to 5.7%. At the end of September, a new EV, the Sylphy Zero Emission, went on sale. In China, we have a strong plan for electrification, including the Sylphy Zero Emission. We will launch 20 new EVs or e-Power models by 2022. In the United States, TIV decreased 0.6% to 8,790,000 units. Nissan sales declined 9.1% to 709,000 units, equivalent to a market share of 8.1%. We continue to work on normalizing sales in the United States. Dealer inventory levels are improving and decreased by about 54,000 units since the end of March. Incentives per unit improved from the second quarter compared to the prior year level. In early October, we introduced a new Altima, which is expected to contribute to the control of incentives in the second half of the fiscal year. In Canada, Nissan sales rose by 1.8% to 82,000 units, equivalent to a market share of 7.2%. In Mexico, Nissan sales decreased 13.6% to 150,000 units, while we maintained our #1 position with a market share of 21.7%. In Europe, including Russia, Nissan sales totaled 330,000 units, a decrease of 12.1%. Excluding Russia, Nissan sales fell by 14.3% to 280,000 units, which resulted in a market share of 3.2%. The introduction of WLTP in September is impacting our sales as well as the industry. We are taking actions to address this issue. A new WLTP compliant engine is now available for the Qashqai in Europe from October. The new Nissan Leaf continues to deliver strong sales, particularly in Northern Europe, growing by nearly 2.5 times from the same period last year. In Russia, Nissan sales increased 2.4% to 50,000 units, equivalent to a 5.6% market share. In other markets, Nissan sales rose 4.3% to 407,000 units. In Asia and Oceania, Nissan sales volume decreased 4.3% to 158,000 units. Our sales volume increased significantly in Thailand and the Philippines. However, sales decreased in Indonesia and India, where issues remain. Driven by strong demand for the Kicks, Nissan sales in Latin America grew by 21.1% to 113,000 units. In the Middle East, Nissan sales dropped 2.4% to 84,000 units, but outpaced the market. Sales in Africa and other markets increased 13.3% to 52,000 units, mainly due to strong growth in Egypt. Moving to our financial results, as with previous quarters, Nissan is presenting its financial performance under the equity accounting method for our joint venture in China. Consolidated net revenues in the first half totaled 5.53 trillion yen. Operating profit was 210.3 billion yen, which equates to an operating margin of 3.8%. Non-operating profit increased significantly from the previous year to 119.6 billion yen, primarily due to the increase in profit from companies under the equity method. Our joint venture in China was the largest contributor for this increase. Ordinary profit, which includes non-operating profit, was 329.9 billion yen. Net income was 246.3 billion yen, which represents a 4.5% margin. Looking at the operating profit movements in detail. Foreign exchange was a negative impact of 49.3 billion yen, and raw material prices had a negative impact of 53.9 billion yen. The negative impacts caused by increases in investments for the future, including R&D and manufacturing expenses, and sales performance primarily resulting from the decrease in sales volume in the United States and Europe, were offset by the positive contribution from cost items, including purchasing cost reduction efforts and product enrichment. The bottom of the graph notes the results for the 3-month period from July through September. The trend is consistent with the first half of the year, as our initiatives to normalize sales in the United States are beginning to deliver results. The negative gap from the sales performance has narrowed compared to the first quarter. As a result of our dealer inventory optimization initiative, our dealer inventory decreased by 100,000 units in the first half, and we ended the quarter with 510,000 units. Inventory decreased in all major regions, including Japan, the United States, and Europe. On the management pro forma basis, which includes the proportionate consolidation of Chinese joint venture, our key indicators for the second quarter showed that net revenues totaled 3.17 trillion yen. Operating profit was 152.3 billion yen, which equates to an operating margin of 4.8%. Net income totaled 130.4 billion yen. Automotive free cash flow was 17.3 billion yen. We ended the period with automotive net cash of 1.84 trillion yen. In summary, our results for the first half were unfavorable as we faced a number of challenges, including declining in sales in North America and Europe, increasing commodity prices, and foreign exchange headwinds. Our efforts to enhance quality of sales in the United States will take time but are gradually producing results. More improvements are expected in the second half of the fiscal year. In addition, the cost reduction initiatives are progressing well, and we expect Monozukuri to achieve a solid performance. As such, we are maintaining our previous guidance for the full fiscal year. Automotive free cash flow was slightly negative for the first half due to the decrease in earnings as well as negative working capital resulting from the dealer inventory optimization. But we expect the free cash flow to recover in the second half in line with the earnings recovery. We expect to achieve free cash flow of around 300 billion yen for the full fiscal year, and for this reason, we continue to project a full year dividend of 57 yen per share, a 7.5% increase from the prior year. Earlier today, our board approved payment of an interim dividend of 28.5 yen per share, which will be paid at the end of this month. Thank you for your attention. I will now be glad to take your questions. Thank you, Mr. Karube. We would like to move on to the question and answer session. Please raise your hand if you have a question. We will bring you a microphone. So please use the microphone and ask your question. In order to entertain as many people to ask questions, I would like to limit the number of questions to 2 questions per person. Thank you for your cooperation and understanding in advance. Please raise your hand if you have a question. Yes. Yes, the person at the front row, please.
Sean McLean for the Wall Street Journal. Apologies for the question in English. I'm wondering if you could give us a little bit more details on efforts in the U.S. to improve quality of sales. You said it's gradual. I mean, where are incentives now, and where do you see them being by the end of the year, and what impact maybe new models have had? Excuse me. And then secondly, on your decline in inventory, could you give us a breakdown a bit on how much of that was in the U.S. versus other countries? And sorry, that's the first question. Second question, midterm elections recently completed in the U.S. Any thoughts on how this might impact clarity on things like NAFTA and other trade-related issues?
ありがとうございます。アメリカ
Thank you for your question. One is about the recovery status in U.S. and the midterm election that took place recently. Our opinion about this election. These were the two questions. Starting with the midterm election. Yesterday and today it ended. So as a single company, we are not in a position to answer this, but this is the result of what American citizens selected, because business is about making best efforts in the given circumstances. In the given circumstances, we would like to do our best. That's all we can say. And in the United States, we are working on enhancing quality of sales, which was part of your question, I believe. And in the United States, the inventories, as I said earlier, overall, in 6 months, we reduced by 100,000 units. In 3 months, we reduced by 50,000 units. This is the level at which we reduce the dealer inventory, out of which extracting U.S. In 3 months, we reduced U.S. inventory by 54,000 units. In 6 months, in 3 months, we reduced by 26,000 units and 54,000 units in 6 months. And we are at 260,000 units today. 260,000 units. Well, it's at an appropriate level at this moment. And the mix of the inventory. Last year, we had old model years, which accounted for a big portion. So in the third quarter, we had a lot of old model years to sell. So that is why we spent a lot of incentives, and fleet proportion was at plateauing at a high level. So this year, the absolute number is smaller, which means that after third quarter, the models that we are going to sell, the proportion of the old model year will be smaller in proportion. That's why from October, we launched new Altima. So in addition to this new Altima, this will contribute to a better quality of sales. And latest incentive performance. Unfortunately, we can't say that we have largely reduced the incentive yet. We are not there yet. In 3 months, in Q2 3 months alone, revenue ratio, we are 0.1 percentage points, 1.1 percentage points better. We have to do more. In third quarter and fourth quarter, we need to continue working on this. Thank you very much. Moving on to next question.
一番前の方。
Next question, please.
すいません。
Thank you very much. From Nihon Keizai, Okazaki Okada is my name. I would like to start with the commodity price. The impact of the commodity price in the first half, 53.9 billion decline. But I think on the full year guidance, you expect the 80 billion impact from this. So ordinarily, it should be 40 billion after the first half. It seems a bit higher. So what was the impact and the driver behind it? For example, steel, aluminum tariff increase, did it have any effect? Could you please talk about the environment? And I'll go on to my second question. I'll ask one by one then. All right. Yes, about the commodities. On a full year guidance, yes, we did mention the number of 80 billion yen. That was the full year guidance. That was the negative impact we envisioned for the full year. Now, aluminum, steel related tariff, there was slight impact from that, but in actuality, it hasn't really kicked in just yet. For example, other materials such as steel, if you include other raw materials, overall, generally speaking, the prices are on the upward trend. So therefore, on the full year guidance, I would imagine they could be somewhat slightly higher than what we had visioned for the full year guidance. Thank you. Next question. It's about trade friction. I hesitate to persist on this matter once again. This relates to the earlier question. So the midterm elections are over, and Mr. Trump twittered that he's going to emphasize a foreign policy going forward. So U.S., China, and also at TAG, trade agreement on goods, and also new NAFTA. So the impact of these trade issues going forward, will that impact Nissan's global management? What potential impact do you see? And also, what about the potential impact on your global supply chain? Is that going to translate to your revisiting your global supply chain structure? So will that affect your business operations? If you could share your insight, please. Thank you very much. I thank you for that question. Well, we are not sure how the rules are going to change at this juncture. And so we cannot say anything definitive at this juncture. I'm sure you'll understand. Well, let me see. As far as NAFTA is concerned, yes, recently US and MCA, that was agreed upon, if you will. And we're now trying to study the details of this agreement. So employees, supply chain, employees and suppliers. It's our expectation that there will be positive impact on employees as well as our suppliers. But we're just studying the details at this moment. Now, the relations between US and China. Well, our direct export to China is limited to begin with. And also, business between US and China, in the context of Nissan, that the scale is not that significant either. So I don't expect any immediate impact, if you will, on this front. In case of China, we have pursued localization. We have been pursuing localization in China. So that being the case, immediately starting from tomorrow, I don't think we will be faced with the need to make significant changes starting from tomorrow. But again, we are not yet aware of the details, so we will closely monitor the situation. Thank you.
Thank you very much.
はい。
Yes.
すいません。
Excuse me, Nihon Keizai Shimbun. My name is Yamamoto. I have a couple of questions. The first one, earlier you presented this, but once again, could you elaborate on the U.S. recovery actions for the second half of the year? Is there any additional actions that you are taking on top of what you have presented with regards to Altima? In October, you launched Altima, and this will contribute to incentives. That's what you said. On the other hand, the competitors' sedans are not doing better. So what's the chance of winning in this segment? Yes, in U.S. Is there any additional magic wand? No, we don't have an additional magic wand. We will steadily work on increasing brand value, make the products better, make the distribution network stronger. That's what we are doing. Especially in the first half of the year, originally we had to work on it, and we have been working on it in the past years, in fact. The TIV is peaking out. And as someone asked, there are a lot of uncertainties within the U.S. And against such backdrop, and on top of this, Nissan is trying to rectify the things that we didn't do well in the past. And as a result, we are taking more time than what we expected, or we are spending more cost than what we expected. That's the review on the experts that we are enhancing the quality of sales in U.S. So we will spend time as an entire management. We are working on enhancing the quality of sales in U.S. Under this strong intention and resolve, we would like to do it one by one. And with regards to Altima, in October, this went on sale. So it's too premature to, well, we don't know how the market is reacting. And unlike Japan, we are not starting the sales on the very day. There are new models and old models mixed up in the market, so we have to spend more time, wait more to see the results. ProPilot Assist, VC Tower, these new features or new technologies, a lot of them are adopted on this new Altima. So I am confident that the customers will appreciate them. The segment itself, sedan segment, where Altima competes, which is called D sedan. This D sedan segment is slightly shrinking, and you're right to say that. There's a big shift from passenger vehicle to truck in the entire market. But still, this sedan market accounts for about 10% of the total market. And in this segment, by introducing appropriate products, we would like to sell a large number, and it's a totally new car. So we don't have to make a big discount or spend a lot of incentives. So this car will definitely contribute to reduction of incentive. I'm sure about this.
はい、ありがとうございます。じゃあ一番
Thank you very much. Next question, please.
神奈川新聞
Tasaki from Kanagawa Shimbun newspaper. It's about the consumption tax. But in the second half, toward the end of the second half, there could be a move in relation to the consumption tax. So maybe the following year, because this could affect the TIV and demand. And also, on a related note, do you intend to make a request to the government on this matter? Or do you intend to, for example, make comment on this matter, please? Well, I really can't say anything more than what is generally commented, naturally. Immediately preceding the consumption tax increase, it is likely that there's going to be run-up demand. And then there's always a reaction afterwards, generally speaking. But at the same time, we're also, JAMA is also making a request about the vehicle tax, auto tax. If this could be revisited, then this could actually, of course, save the day. It is a matter of timing. So this could contribute to the averaging out of the demand. And so we're hoping that such measures can indeed be taken. Thank you very much.
一番前
Yes, the person at the very front here, please. Thank you. Sankei Shimbun, my name is Takahashi. I have a couple of questions. The first one is about UK Brexit. If Brexit is done without agreement, how are you going to take action? Sunderland plant, the labor expense negotiation is delayed, and I'm sure you are assuming a worst scenario. So what do you say about this when there's no deal? And Brexit. We are still waiting for an official announcement, which will come in the end of next March, I believe. If nothing happens, there will be a Brexit. But we don't know how it will land. So we are waiting. Rather than studying, we are waiting for the announcement. In UK, in 1980s, it's like how many years? More than 3 decades or 40 years ago, we started the plant with R&D center. So we have established a strong entity in United Kingdom. So we are looking for organized and well-balanced solution. That's what we are expecting. And for the labor cost negotiation, next fiscal year, we are going to negotiate on the salary. This is not directly linked to the Brexit because the internal circumstances. We want, as things become clearer, we wanted to start the negotiation. That is why we postponed the negotiation to next year. So no, Brexit without deal, then the customs will be cumbersome and the part supply may be suspended or disrupted. But so far, you are still seeing the run of events because we are still waiting how the things will turn out. Thank you. Second point. And there were similar questions raised about this. After the midterm election, President Trump said that the trade imbalance between Japan and U.S. about automobiles was what he mentioned. So increase of tariffs, which is frozen, and the Forex and the limitation of volume may rise as part of the discussion. So with regards to these risks, how do you evaluate and how are you going to take actions against these? This is about today. It has been said yesterday. So we haven't held any discussion about it. So we are not ready to give any answer. But basically, Nissan Motor is supporting a free trade. So we are expecting a more free type of structure. We can't say more than that. Thank you.
はい、真ん中の方。
Next question, please.
そうだ、ブルームバーグ
Bloomberg, Suzuki is my name. I would like to ask about operating income for the second half. Compared against the first half, it's improving. So what are the drivers for improving the operating profit in the second half? And also emerging currency devaluation. any countermeasures in relation to the drop in the value of the emerging economies' currencies? Thank you. With regard to the second half of the year, I believe there are 2 or 3 major drivers. One is that in the first half, as I mentioned earlier, we've been trying to reduce inventory. We've reduced inventory, and that has more or less reached its course, which means that we'll be able to have a more normal situation whereby the customers will be able to buy vehicles in a more normal environment. So that's one significant driver. And the other is the cost reduction efforts. From the first half, we've launched various efforts, and from the past, we have found that the cost reduction efforts are skewed more heavily toward the second half of the year. And the third driver, as was asked by one of the questions earlier, it relates to our efforts, the launch of new models, primarily in the United States, and this will increase and improve the quality of the sales in a steady manner. And as a result, we believe that this will help us to improve our profit. And also with regard to the currency, well, we've had a situation where the value of the currency went down by 50% over a 6-month period. That is the dynamic we see in the marketplace. So it will be very difficult to try to make a recovery all at once against that backdrop. But then, as was mentioned earlier, the Turkish lira and the Argentina peso, with regard to these currencies, over a 6-month period, there was a drop by 50% or 50%. Increase in retail price by 40%, 50%. Everyone is raising their prices, and we've had to follow suit in the marketplace. So half of the drop in currency value was offset by the increase in the prices. However, again, we're talking about the currencies are being halved, and we can't just because the currency value dropped by half, we could double the price. But we've been able to offset maybe half of the drop in the currency value. Thank you.
Thank you. The third row from the front, please. Toyo Keizai, my name is Kishimoto. I have 2 questions. Let me be persistent. U.S. sales, better quality of sales in U.S. Earlier, you said that you are spending more time and cost than what you expected. So why is it more time consuming and more costly? Why do you say that? Could you give us the details on this? And the second one is about Chinese market. In the Chinese market, seems to be slowing down, and Nissan's new car sales in September and October declined year on year. And China is under equity method, but after the second half of the year, how will it impact the business performance? How do you project the Chinese market to deploy? U.S., I will talk about U.S. first, and with regards to China, we have Uchida-san, who is in charge of China here. So Uchida-san will talk about China. U.S., we are taking more time and cost. The biggest reason here, it was TIV is peaking out. That's the major reason. And a lot of things are happening, including economic side in U.S. Things are kind of uncertain. We couldn't assume well how hard it will be in these circumstances. We didn't think that TIV will grow, but still, 2 years ago, if we have done this 2 years ago or 3 years ago, we would have done it faster. However, today, because the economy is a bit noisy, so to speak, and TIV is peaking out, slightly declining, and enhancing quality in this text was harder in terms of time consumption and cost, more than what we expected. China will be presented by Uchida-san. I'm in charge of Chinese joint venture. My name is Uchida. With regards to Chinese TIV, as we explained, in 2018 first half, TIV in China increased by 5.4% or 5.5%, but in the third quarter, 5.1% or 5.4% decrease was what we suffered from. Whereas between January and September, we increased by 7.4% year on year. Looking at the latest, the TIV slowdown, we are monitoring this carefully, but in the mid and long run, we believe that market and economy will recover. We believe that it will grow. And against such backdrop, we would introduce a new model which people appreciate in a timely manner and continue growing in China. That's my intention. Thank you, Uchida-san. Yes, thank you. So moving on to next question.
Hayakawa from NHK. Thank you for this opportunity. I would like to ask two questions, if I may. First, with regard to the U.S. market and the European market, it seems that sales are dropping, and I think you struggled with the financial performance this time around. So, can you share with us how you review the financial performance for the first half, and also going forward, there are uncertainties about potential increase in taxes. So, what countermeasures do you think will become necessary in the coming year? That's my first question. Yes, thank you very much. As I've been repeatedly mentioning, with regard to the United States, it's been, yes, we've had, it was more time consuming. And in terms of the overall profitability, we would hope that we could reach a higher level. We hope that we could have attained a higher level naturally. That is our impression. Now, as far as the progress to rate is concerned, 450 billion yen, I think that was the guidance, that was the guidance that we provided. And the progress to the annual plan is 40% against that annual guidance. Ordinarily, we have found that the second half is usually more, the progress is more heavily skewed toward the second half rather than the first half. That's been the history of Nissan so far. But even still, we hope that we could have reached a higher level naturally after the first 6 months. Now, with regard to the sales in US and Europe, what we have to do is to improve the quality of the sales in the United States. I think that's all we can pursue, and we'll indeed achieve. This will be achieved, although some costs might be required. But without improving quality of sales, we do not believe that we'll be able to normalize the profitability, if you will. We want to make sure that we're able to recover profitability, which is on par with our competition. So that being the case, the prerequisite is improving the sales in the United States. My other question. And this is already covered in the media. The National Tax Authority has pointed out that you have misreported your tax earnings by as much as 24 billion yen. So can you talk about the validity of this report and how do you intend to address? Yes, the Tokyo Tax Bureau has said that with regard to application of the tax haven, they have provided disposition based on this tax haven provision. The insurance company Bermuda, there is an exemption about the application of the tax haven on this company in Bermuda. And there is a difference of views between the authorities and our company. Now, we believe that we have made appropriate notification and reporting to the authorities. So, therefore, we are going to ask for we have filed a complaint with the National Tax Tribunal for a given year. For example, with regard to the disposition for one given year, we have provided notification. So it's not that this business, it's not that the business carried out by the company was indeed scope of tax haven, if you will. It's an accounting rule. So it is simply a difference of views about the accounting, if you will. That's how we view the situation.
Thank you. The person at the very back of the room. I am Toshi Keizai. With regards to the sales plan, in the initiation of fiscal year, the full year sales plan was 2.7% increase year on year. That's what I remembered. In the second quarter, it decreased by 1.8%. Full year sales plan was revised, including the regional regional mix. For this quarter, sales volume and profit were not, full year guidance remains unchanged. However, as you said, in the first half of the year, volume fell by about 50,000 units year on year. We wanted to increase the sales, but this decreased by 50,000 units. By region, as I said, I always talk about the same markets. US and Europe are weak, while China and the other markets are doing a good job. Japan in the first half of the year. Last year, in the first half, this was before a lot of incidents happened. Note and OT power were very strong, but compared to last year, this year we have a slight increase. In the second half of the year, last year's performance was low, so I'm sure we will do better in the second half of the year for Japan. Japan, China, and other markets are on the positive side, while US, North America, and Europe are on the negative side. So overall, compared to 5.925 million units, if I remember correctly, this may be hard to be achieved. But however, there are other positive contributors. So all in all, we retain the full year guidance. Okay, thank you very much. Okay, any question? If not, we would like to close this press conference. Thank you very much. Thank you.